PhillipCapital Experts Talk. My name is Lin Sin from Phillip Securities Research. Today, we are privileged to have Mr. Yves Malliot, Head of European Equities Investment Division from Natixis Asset Management, to share with us why should we consider diversifying our portfolio with Europe's small cap equities. A brief background of Mr. Yves Malliot. Mr. Yves Malliot is the head of Natixis Asset Management's European Equities Investment Division. He started his career in 1986 at Credit Commercial de France as fund manager covering equity and balanced portfolios and derivative products. In 1992, he moved to Barclays France as fund manager for institutional dedicated funds and corporate savings schemes. Mr. Yves Malliot then spent 14 years with the Robeco Group in France as head of asset allocation and equity investment and head of fund management. In 2012, he joined Natixis Asset Management as head of European equities. Mr. Yves Malliot holds a master's degree in economics from Université Paris I, Panthéon-Sorbonne, and a master's in finance from Institut d'Administration des Enterprises, IAE, Paris. He is also a graduate from SFAF, the French Society of Financial Analysts. Thank you, Mr. Yves Malliot, for taking time to attend this interview with us. Could you share with us on your investment philosophy?
Yes, about our Europe Small Companies Fund, our philosophy, our style, I would say, is GARP, growth at reasonable price. But we are also looking at quality, which means that when we select a company, we look first at the value creation, meaning that we want to find out companies with a high return on capital employed, higher than the cost of capital. That's creating value, generating cash flow over the time. We thirdly look carefully at the corporate governance of the company. And finally, we look at the valuation, but first looking at the quality of the company, at the business model of the company.
The small cap equities typically have higher growth rates and potential, but are also more cyclically sensitive. Tend to lead large caps in performance during economic expansions, but also are more volatile and are hit during cyclical downturn. In this regard, investors are always torn between whether to go for the large cap or small cap funds. Could you share with us on why should investors consider including small cap equities in their portfolios?
Yes, for one single reason, because over the long term, as you mentioned, the earnings growth of smaller companies is larger than the earnings growth of large companies. So it's a good reason. Of course, during market stress, we can have underperformance on the short term on small caps investments. But over the long term, even if small caps are more sensitive to the cycle, but over the long term, we can find a premium by investing in small caps because of the higher earnings growth.
And that brings us to the next consideration regarding equity allocation. How much to allocate to small cap equities in their portfolios?
Well, I would tend to say as we have a better performance over the long term for individual investors to invest 50-50, but I would say for institutional investor with huge amount to be invested, I'd rather say that the good allocation is close to 20% in average. More than the 10% they represent in the benchmark, but more close to 20% of the total allocation. It's a good, I say it's a good weighting.
Which are the sectors that you are optimistic on and have more room to grow?
Well, in fact, we are, the team is purely a team of stock pickers, and we have a pure bottom-up process, which means that we don't allocate by countries within Europe or sectors. It's quite different from the large cap fund management. But that's true that we are looking at quality, growth, and typically today we have some themes we like much than the others. For example, within the IT sectors, within the digital economy themes, you can't find many good companies in Europe. It's more in the United States. But however, if you look at the mid-sized universe, you can find market leader, even world market leader in Europe. Digital economy is one theme. The themes of aging population, because when you grow older, you need more drugs. So the pharmaceuticals, the medical equipment is another interesting field. Also the asset management, because getting older means you need to save, and so it's a growth for the asset management industry or the private banking industry. So that's our two very interesting themes we look at currently.
And how do you manage the downside risk of your portfolio?
We carefully monitor the liquidity of the stocks, and we say to our clients we have to invest for the long term. So we look again carefully at the liquidity of the stocks. We don't invest in too small companies with too small free float on the market. That's the way we do for managing the risk. Again, it's a liquidity, lack of liquidity from time to time.
The Natixis Europe Smaller Companies Fund only invests in the 15 developed Europe countries. Despite its investment mandate, actually provides the fund the flexibility to invest into the emerging Europe. Could you share with us your stance in the European equities?
That's true that we have in Europe some interesting growing economies in the central and eastern part of Europe. First of all, in Poland, the economy is growing quite well, but also Czech Republic or Hungary. It's quite uneasy for an investor to invest on the specific markets, Poland or Czech Republic, and often the indices of those countries are much concentrated on some names. And finally, the best way to invest in Eastern and Central Europe is to invest in Western Europe companies, which develops businesses by selling in those countries. For instance, Germany is very well placed to sell in Poland, Czech Republic, also in Russia. And the German companies also invest in industrial units in those countries, because salary costs are much lower than in Western Europe. So you can see that the best way to invest in Eastern Europe and Central Europe is to invest in some Western Europe companies. That's the way we say it's the best way to invest in those countries.
Thank you, Mr. Yves Malliot, for sharing your insights with us here today. For more information on unit trust, please log on to www.eunittrust.com.sg or talk to us at any Phillip Securities branches. Thank you.